You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionFit.com.
All right, everybody, from the options capital of the world, scenic and sunny Chicago, Illinois, this is the Option Block, everyone's favorite, I hope it's yours, bi-weekly source for all things options related. My name is Mark Longo, coming to you from the Options Insider Studios here again, back in lovely Chicago. Certainly a balmy 85 or so degrees today in September. We'll take it here in Chicago this time of year, and of course, in addition to the old network and the old studios, you can also find our work over there at theoptionsinsider.com for some analysis, some education, some unusual activities, some breaking news from the world of options, all sorts of fun stuff, as well as, of course, all of our fun radio archives, which you can also find iTunes, TuneIn, Stitcher, pretty much wherever you find your favorite podcast programs. I was playing around with Pocket Cast the other day, which is a popular podcatcher for iOS and Android, and it's so fun. You just type in options into their search directory. We have so many programs now, we kind of just overwhelm the results. So if you can't find us, you're doing something wrong there on the various search engines. One of those 13 programs is bound to pop up. And of course, you want to find the direct one, just type in the name directly. No shortage of ways for you guys to enjoy our content. And of course, if all that's too much work, you can't be bothered, just grab our mobile app available for iOS, Android, and indeed the ever-burgeoning Fire OS. A couple new tablets announced the other day, so maybe a handful more of you will be using the Fire OS version of our app in the weeks and months to come. And joining me on the old program today, starting off with the man not beaming in from the options capital of the world, but right outside of it, St. Charles. That is just the capital of all things temperate and tropical. You know him, you love him, as Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. I saw a lot of your colleagues this morning at the old CTA Expo here in downtown Chicago today, so I was overwhelmed with RCM today.
Oh, it's always an exciting thing, and at the future, whenever we have the futures trade shows in any way, shape, or form, I bet it was a lot of fun.
Quite the large crew rolling on the CTA Expo from RCM. You guys roll deep there.
Amen, brother.
All right, and also joining us from the capital of perhaps nothing except LL Bean and, of course, tasty, delicious lobsters, we have the Rock Lobster himself, Mr. Andrew Giovinazzi. You may know him and love him, or perhaps loathe him, from his legion of appearances on the old Options Insider Radio Network, including the much-lamented, but hopefully soon-to-return Options Oddities program, as well as, of course, this show, Vol Views, and a few others here or there. He also does some moonlighting over there at the place called The Pit. Mr. Rock Lobster, welcome back to the old program, sir.
It is thrilling to be here, and for the first time in a while, I don't have to take umbrage on my intro.
Only slight
umbrage.
There's
no umbrage.
No umbrage. I like it. Cool. So I've set a new record then for no umbrage this time. Usually there's some umbrage somewhere. You or Tosaw are somehow upset at something that I said.
Somehow, but you know, what I heard, a little birdie told me that if you're a little grumpy, you live longer.
Yes, I have heard that fact as well. So perhaps we need to be a little more bitter on this program. Too much fun, too much frivolity, time to get down to serious business. And I think without further ado, and perhaps to dispense with the frivolity, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaken in today's markets. We are recording this on Thursday, September 17th, for all of you playing the home game. And of course, unless you've been living under a rock, you know what day today was. Today, the Fed decision becoming imminent became actual fact. Of course, we saw the Fed, after months of Sturm and Drang and nonsense and raising their hand and saying, us too, we're still here, don't forget about us, decided today in their infinite wisdom to do absolutely nothing. This is the family show, so I won't curse on this program, but I am tempted to just say, F the Fed. What the hell was this past few months all about? There was really no meaningful indicator anywhere that said the Fed should even come close to raising rates. You have emergency cuts in China. You have IMF coming out several months ago and saying if Fed raises rates, they're really going to be just doing disastrous things to the economy. And of course, even the net move itself was kind of going to be meaningless, 25 basis points. Yet it's no small argument to make that they were, of course, all of these recent moves you saw in the marketplace, the massive sell-off, the rallies that then were turned into sell-offs because some new economic data came out that seemed to reinforce or hurt against the chances of the Fed raising rates. All of that was exacerbated by Miss Yellen kind of raising her hand and saying, hey, don't forget about us too. We're still here. We're going to do something. We don't know what, but we're going to do something. And of course, they ended up doing nothing, which is exactly what everyone and their mother who had any sort of sense said they were going to do. And so we had several months of exacerbated volatility, which selfishly I should like. I love volatility in the marketplace. I'm an options guy. That helps from a content perspective. It's been good for us. So I try to put my selfish interests aside, look at the big picture, look at the macro environment, look at the retail investor, how they've been impacted by this. And it's kind of hard to make any sort of argument that all of the Fed, nonsense over the past few months has done anything but harm the marketplace as a whole. So I'm starting off, there goes all that frivolity you were talking about, Mr. Rocklaps. I'm starting off on a bitter note, but I'm a wee bit bitter on this one. This just leaves a sour taste in my mouth. All this nonsense, I'm kind of the opinion, maybe this is perhaps some of my libertarian leanings there, but I'm of the opinion the Fed has nothing to say, nothing meaningful to add to the conversation, then get the hell out of the way, let the markets do their thing. You don't need to be there waving your finger saying, pay attention to us. We're not really relevant, but we might do something. And just that little notion exacerbates everything else. And I'm not saying the last 2 months would have been a picnic. We still would have had sell-offs and everything else, but it's kind of hard to argue they didn't exacerbate all of this. And of course, today, intraday, all that vol we were speculating on last week. Is it going to stay? Is it going to stay? Well, there goes the Yellen vol intraday. We got below 20 at 1.18, I believe, in the VIX cash before it bounced. So just a lot of craziness. All my vitriol coming out. Mr. Rock Lobster, take it away. Maybe perhaps you have something more upbeat, uplifting to say. But this whole Fed experiment of the past 2 months had left me increasingly bitter.
I don't know. I thought there was a lot of cool things to do from that point of view, from an opportunity point of view. So I'm not going to say I was bitter, but I also, I hadn't sold a bunch of vol at 12% prior to the total crack up we had. So, depending on where you sat earlier, it would probably that's where your bitterness level would be. As of right now, I'm surprised that the volatility bounced back as strongly as it did because, you're looking at October vol and what the heck's going to happen now? Maybe everybody's waiting to see how overnight goes or something like that. But I would think that the vol would come in a little bit more, but it has not. Even though it did all the vol products and the futures just got totally hammered there for about an hour. So I don't know if that is the shape of things to come. I think it actually is, because we're actually going to need a reason now for people to go out and go sell their stocks and, freak out because what are you going to freak out about now? I don't know.
Yeah, I was kind of surprised by that too, that all of a sudden it caught a bid. It seemed to, I saw some of the VIX cash today. I had a little bit of time when I was at the conference, couldn't really pull up the futures, but I saw that VIX cash hit the 18 level, then kind of just come roaring back to life. And I was looking at this saying, who's putting this bid back into vol? What are we looking at now? And so you're right. I was kind of surprised by that. And I do also take your point. There was, from a doing stuff perspective, certainly a heck of a lot to do. I think selfishly for all three of us, this Fed exacerbation of volatility has been good for our collective businesses. But again, I try to look beyond myself sometimes and see the bigger picture. And I think in that big picture, kind of hard to make a positive argument for Mrs. Yellen's activities over the past few months. But, if there's a diehard optimist among us, it is indeed Uncle Mike Tosaw. Uncle Mike, perhaps you have a cheerier viewpoint, or perhaps you're like me. You're just deeply bitter and cynical at this point.
See, I'm going to let the listeners in on something. This bitterness that Longo's saying right there, don't believe it, everybody. He is in cahoots with Janet Yellen. I saw them having drinks together at this futures conference the other day, and she's doing all this so it can enhance volatility to give him content for his shows. All this stuff that he's saying about how bitter he is, it is not to be believed. So with that note aside, I am not bitter by any means, but I am concerned in terms of being the permanent bull with which I am. Going into today, my plan of attack was that if we could close above 2,000 on the SPX, I would consider getting back into some more bullish positions in my SPY call strategy. And while we obviously didn't do that, just in looking at it, right as the press conference started, you can see that we rallied. And Yellen sounded very dovish to me when she was saying what she was saying. And what concerns me about today, being the bull with which I am, is the fact that, one, we couldn't break 2,000 in the SPX when the Fed basically did the equivalent of raising rates, which is did the equivalent of lowering rates, which is not raising them at this point in time, it seems. But in reality, we did rally for a little bit, and we went right back down. So just in terms of the intraday action, if you look at an intraday chart of the S&P, we had a nice little rally going till about an hour before the close, and then the bottom kind of fell out of that rally going into the close. And I'm curious to see what we end up doing in the overnight futures market. But today, if you're a bull like me, folks, I would still continue to tread very cautiously.
Yeah, of course, intraday SPX getting up to about almost 20 handles north of that 2,000 level, I think about 2018 or so, or right about there, before it kind of just turned on its heel. And as vol started turning north, S&P started turning south, and the bears got their claws out and said, you know what, the heck with it, we're still going to crush this thing. And most of the major indices, SPOO's closing off about 8.5 handles or so today, and the other indices closing off commensurate levels there. Not a bloodbath by any means, but certainly not the aggressive rally perhaps a lot thought or we're hoping for once we got this Fed nonsense out of the way. And Uncle Mike, I know you were saying on the last show last week that you were on that you were waiting for the Fed to do something, anything. You didn't really care what it was at this point. You wanted to just get kind of that Fed fluff out of the marketplace. You said you're not really ready to get back in, but does this at least appease you for the near term, that you think maybe you're a little more confident doing things, or you're still pretty much concerned even though the Fed is ostensibly out of the way for the near future?
I'm actually more concerned today than I would have been had they raised rates, quite frankly, because of the fact that the Fed didn't raise rates. And if the Fed doesn't raise rates and continues with this zero interest rate or near zero interest rate environment with which we have, and stocks aren't able to rally off of that, I think that's actually very concerning. So I'd like them to do something, but apparently they either, number one, want to continue to remain relevant in the world, or they're seeing a lot of stuff that we don't in terms of, or they just or this is just a message to us saying, look, things aren't really where they need to be yet.
Well, speaking about the impact of all this volatility, we talked on a show earlier in the month when the August numbers came out about how much volume came out of this vol as a result, and certainly was a great month from an options volume perspective. All this volatility, all Mrs. Yellen, if she's doing cahoots with anybody, Uncle Mike, it was the exchanges, because this certainly has been banner times for them. Going into August, of course, we were down year-to-date overall options volume over 4%, about 4.1%. August knocks it out of the park. And like I was saying earlier this year, we really only need one good month to turn that around. And August was certainly it. In fact, just the last couple of weeks of August was really it. The earlier part of August not really doing a heck of a lot. So now that put 2015 on pace to outperform last year's volume. Year-to-date, of course, not total. We haven't surpassed it yet. And, of course, I mentioned some of the other volume records. I don't think I mentioned before that surprisingly, a lot of people thought that 24th, that day of the massive sell-off, was the biggest volume day from an options perspective. But it wasn't actually. It was the Friday preceding that. Remember, there was a big move on that Friday as well, August 21st, with about 39.4 million contracts going up so far in that day. It was the third highest volume day ever. August was indeed the third highest month for volume ever. So a little bit more analytics there. But some people surprised to think that 1,000-point sell-off in the Dow and everything else would have generated a lot more volume than it did. Certainly was a high volume day, but it was so stark and so sudden. I think some people were so taken off guard by it, and also the markets were thin on top of it, high vacation time. It just didn't really accrete to the volume that Friday's move, even though smaller, certainly did. So some interesting additional analytics coming out of the old August month. And since we're talking about Fed nonsense, maybe we'll move on to some other things that are equally nonsensical just to get our mind off of the Fed nonsense. If you're out there and you're saying to yourself, yeah, I'm kind of interested in this cryptocurrency stuff. In fact, I sat through a whole session today on cryptocurrencies at the CTA Expo. So clearly they're hot in the alts world right now. But you're saying, I don't really have the product depth I need to trade my Bitcoin effectively, or I'm long a lot of Bitcoin and I can't really hedge it, so I'm a little bit worried about all this volatility. Talk about volatility. Bitcoin's got it in spades. Well, these these college kids over at Alt Options claim to have you covered. They've created what they're calling the CME for Bitcoin, and essentially they're going to list options on it. So if you're long Bitcoin from whatever level, let's say you're long 400, you're worried about it dropping, you buy the 350 put, and you sleep well at night. And I'm just assuming that these markets are going to be deep and liquid and very tight, and this protection will not be inordinately expensive. But c'est la vie, you can probably detect the sarcasm in my voice there, listeners. If you were one of those people out there who are saying, I want to get into this Bitcoin thing, but I'm kind of waiting for the options, well, there you go. Now they literally exist. Whether they actually trade or not is another question as well. And of course, when you're getting into this stuff, you're getting into the realm of options on cryptocurrencies. You're getting into a little bit of a dubious area from an oversight regulatory perspective. I believe this exchange right now is regulated by the Financial Crimes Enforcement Network, FinCEN, which absolutely no one has heard of. CFTC, FINRA, SEC, none of these big organizations have really had a chance to sink their teeth into this yet. Maybe that's good if you take a dim view of regulation, but if you want a product that perhaps holds up to a little bit higher standards, then maybe you play a little wait and see with this one. Mr. Rock Lobster, you going to be out there recommending any put buys on Bitcoin options in the near future?
Yeah, it's funny. A friend of mine told me about this one. I think it will be interesting. It'll be kind of a Wild West show, to be honest, to actually see, how all this goes down. I think it could be, very interesting. So it might be, it could be viable, but I'm sure the markets will be, they'll be pretty wide as far as I could get, as far as I could see.
Yeah, I'd love to see that 350 put, how wide that market is. He's going to get in effectively hedged at like 302 or something crazy by the time you pay that spread. I know Nadex has tried this with some binaries on Bitcoin, and I know they tried to get some traction on them. I'm sure if they really have or not. So this is yet another foray into Bitcoin derivatives. If you know how Wild West the underlying is, so that should give you some clue as to perhaps how crazy the actual derivatives on these products will be. But c'est la vie, we'll keep an eye on these. If for no other reason, then it should be humorous in the weeks and months to come. Meanwhile, it's time for us to keep on rolling to our next segment, get away from the bitterness that is the Fed and into the bitterness that is the odd block, because it's time to look at some unusual activity.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
All right, everybody, welcome to The Odd Block. This is indeed the portion of the program where we break down what's moving, what's shaking from an overall options perspective. Today, as you might imagine, a little bit of vacillation in the market, a little bit of things popping off from an unusual activity perspective. This is usually where I dive into a particular name and analyze it a bit for you. And Mr. Rock Lobster jumps in a little bit later, but we're going to flip things around a little bit because I have been out at a conference pretty much all day, just ran in and jumped on the mic as the show started. So I'm going to turn the tables on the Rock Lobster this time and let him lead the dance. So Mr. Rock Lobster, where shall we begin our unusual activity sojourn, our journey into the dark side today? What's catching your eye out there today?
Well, we have a couple of things there. I saw this week overall, there was a lot of activity in what I'll call like the E stocks, like EWZ, EWY, the ETFs for, all the, emerging markets and stuff like that, the BRICS. And in this one here, it's just kind of more of the same. And PBR, Petrobras.
So Pabst Blue Ribbon we're doing?
Exactly, Pabst Blue Ribbon. What we see here, and we've covered this one a lot. Petrobras has been all over the place. There's Brazilian scandals and more scandals. And then there's scandals on top of scandals in there. But somebody wanted to buy some calls. They bought 13,507 OC5 calls for 33 cents. And that is a huge purchase.
Wow. That's size money. Size and size money, because this thing's trading $4.83 today. So a wee bit optimistic, off about a dime or about 2% today. So not the best day for PBR. And you're right, that's about a third of today's volume going up in this one, shall we say, optimistic trade.
Exactly. And open interest was only around 5,000 contracts. They piled into the 5 and 5.5s. Huge. Almost 30,000 contracts between the two. So somebody wants them, and they went up on a price variation, but I could see no real stock blocks trading.
Yeah, because
somebody wants these things.
You want to dump stock at 483 against these.
Yeah.
I want to do that all day. Please give me more 483. Yeah, but looking at a chart here, while you're analyzing this here, and this one doesn't seem as perhaps optimistic as it may initially when you look at an actual chart of this thing, because it wasn't too long ago, just the early summer, this thing was hovering around the 10 handle. So this guy could have a nice doubler on his hands if this comes to pass, or pretty close to it. And back towards the end of last year, towards a tripler, 16.5, it was trading back in October and November of last year. So our friend, perhaps on the surface, a bit optimistic, and that's a hefty price to pay for some upside premium, 33 cents. But that said, maybe if you're a diehard chartist, or perhaps like you, Mr. Rock Lobster, a diehard fundamentalist, maybe it makes a little bit more sense.
Well, I love the story of PBR because it's a company that has basically an unlimited natural resource. They have the monopoly on all the oil around Brazil, and yet the government has found a way to, guess what? Drive the stock to zero because it's become such a patronage cesspool of corruption that they have totally squandered what is pretty much one of the largest oil repositories in Saudi Arabia. So, you got to give it to those good old-fashioned governments to wreck a perfectly good asset, but they did. So anyway, having oil drop 50% probably didn't help too much either. So as it stands right now, that's what we got. So somebody thinks it's going to be bouncing out, maybe bouncing up toward that long-term moving average, whatever indicator you like to look at, and be back in business.
Yeah, they could have some serious business if our friend here is right. We won't have to wait long to find out, listeners. Just October. It sounds like it's far away. I don't feel personally like I'm ready for October to hit yet, but it's coming up pretty quick. So nonsense energy puts aside, Mr. Rock Lobster, where will our journey to the dark side of options activity take us next? I cannot wait with bated breath here. I'm so excited.
More petroleum-esque type companies.
Say it ain't so. I refuse to believe it. There's no way we'd have more petroleum on the list. No way.
Most of these hung up pretty well, even though for whatever reason, they aftermarket, they're whacking the VIX future pretty hard, or actually they're bidding it up pretty hard. S&P 500 is not down a whole lot, but the oil stocks are doing, holding up really well. But in this one, it's Whiting Petroleum. It's like another company that at one point during the year was probably Okay, in midway through through 2014, it was a $92 stock. Okay, and now it is a $17 stock. Still not very. The low of the year was 13.5, so it's still kind of in the basement. And I had a buyer of the OCK 18 calls for $1.80. That's a lot of juice, actually.
Wow, I was just going to say that's hefty.
It's not a small amount.
I don't have that up here. What does that translate to on an IV perspective here? That's got to be pretty hefty, I would think.
I thought it was like around 70 when I looked at it last time, and I will Yeah, it was 88 for implied vol. Pretty high.
Makes 70 a comparative bargain.
Yeah, exactly. I knew it was in one of the bigger numbers. This could be closing, although if you sell that call, why are you closing it? I'm not sure. And I saw some activity in this a couple of weeks ago. So, I know there's been some consolidation in this space. It's starting to happen. But why would you close your OCK 18? I guess if you have a rule where if the stock gets to the strike, you close it and roll. But I didn't see any rolling activity. So either somebody's spending a whole ton of money to buy these calls to get long, or they're closing a short because it's moved to the strike and they don't want to lose the stock. One or the other, but really expensive calls.
If they're closing a short, they're probably sitting on some decent cash. This thing was trading, north of the 20 handle not that long ago. So they could have sold these for a significant chunk. In which case, a 2-handle buyback or close to it, not the end of the world.
Right. That could make sense as well. So, but either way, you don't buy calls because you think the stock's going down. Anyway, that's how I saw that, and I didn't see any block of stock or anything go up against this one. So, again, looks like opening paper, and, off it goes. So
I'm going to dispense with my bitterness here. I'm going to give this guy the benefit of the doubt and say he's closing, and that's why he's paying nearly $2 for these calls. I will give him the benefit of the doubt of that wisdom, that he was savvy enough earlier to sell these when they were trading probably in the 8-handle or somewhere in that range, and now he's closing them out for about $2, and he's laughing all the way to the bank. So I will tip my hat to you, sir, as we move on to our third and final candidate/victim, call them what you will, here in the odd block. Mr. Rock Lobster, will it be a hat trick for petroleum, or shall we go elsewhere for our third odd block candidate?
I was going to do that, but this one has, by the way, the guy on closing another call, that's almost a 10% yield to October for 29 days.
He really wants
selling
it.
Those calls. So
he really wants it.
But QLIK Technologies, QLIK, is a your average technology desktop business intelligence solution, blah 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 blah, and they are they were down about 34. So actually, when I profiled, it was down a little bit on the day, but they closed actually up about 14 cents, middle of the 52-week range. Now, it was an interesting trade. I actually heard this from a friend on the floor, where they sold the NOV 3640 call spread, and they sold the NOV 36 put. However, in November, they were closing the 36 calls because their open interest is around 6,000 there. So they closed the 36 call that they were long, and I think they did well on it. Rolled up to the NOV 40s, and then they sold the 36 put just for good measure. So they kind of went for the old double long. Risk reversal, probably with the call sale, with the profit taking on the 36s. It's a house money roll. That's what it looks like.
Like I've always said, why do one option when you can do two for twice as much?
And get lots of money.
Yes. That's how it works, right? Just money hitting like our guy who wrote in last week. When you get that money, you just turn around and you write more puts with it as margin, and it just keeps on going. Like this big funhouse mirror, never-ending chain of put selling. Speaking of which, I was as a quick aside, I told you I was at that CTA Expo today, and our good friend Niederhofer came up on one of the panels and how he just endlessly sold puts in the S&P, thinking that was a good strategy. And a lot of people raising their hands saying, yeah, this probably won't last long term. And if you know the Niederhofer story, you know it really didn't. But still, yeah, that somehow was reared again in the discussion today. And it seems perhaps salient to hear Our friend is not doing not just writing puts here, but still interesting stuff in good old QLIK. That's going to do it for the odd block. And now, because Uncle Mike had to miss the Monday show, I know he feels bad about having you guys miss out on your dose of strategery for the week. So without further ado, we'll dive on into a special Thursday edition of the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, you know what time it is. It's time for Uncle Mike to grab his bubble pipe, smoking jacket, short sleeve, because it still is kind of warm this time of year here. And instead of a roaring fire, perhaps a nice open window, because it is so temperate and lovely out there in St. Charles, to dispense some options, wit, and or wisdom. Uncle Mike, I know you were chomping at the bit. You couldn't do it on Monday, so now you're back and you're ready to go. What do you have in store for us for some strategery today, sir?
Trading the Fed, actually. An uncertainty in an uncertain market. How's that for a tagline that has never been used before?
Never in my life have I heard that.
Never. Okay, so let's talk about what the Fed did today and how this can play into your trading. And I'll tell you the way with which I'm viewing this and how I think a lot of you should too in a lot of ways. And I'm referring to my fellow bulls out there. Just like Hulk Hogan always had his little Hulkamaniacs out there, I have my bull crowd out there. So with that being said, going into today, we had the market opened below 2,000, or we had closed below 2,000 on the S&P yesterday. And so 2,000 is definitely a very key number. It's one that I believe that it's a psychological number. And we've talked about technical analysis on the show before. I'm not referring to any moving average crossovers, the death cross, or anything like that. But it's a key number. 2,000, it's a very logical key number with which the market does need to go through. And there's a lot of psychological barriers that exist within that number. So my thought going into today was, well, if we close above the 2,000 level, then it's time to start getting into a more bullish state of mind, so to speak, because we will have overcome that hurdle. During the day, we were actually above 2,000 for a little bit, even before the Fed made their announcement. Another key note to take a look at during the day today, going into the Fed, if you take a look at an intraday chart, if you look at, since today is the 17th of September, if you can look at an intraday chart on the 17th of September of TLT, you'll notice that there was a lot of bond buying even before the Fed announcement. Now, does that mean that maybe the news leaked out in some way, shape, or form? I don't know. We'll let you decide on that one. But the point is that when going through something like this, there is a lot of market movement that exists when we have a big announcement. So with that being said, going into today, I was relatively flat. Now, I had tried to get into some put spreads earlier in the week, but was not able to get filled. And I had been very strict, meaning that if it wasn't going to really be like a dream fill for me, I was not going to get into it. And I didn't get filled on a few things. So with that being said, going into today, I was not necessarily resting easy, but not concerned in the least about a downturn because I had no downside exposure in my call strategy and very minimal downside exposure in the hedged equity side of it, as well as the hedged strategic night. So my plan going into today is that if we had a major drop on the Fed news, then I was planning on looking to sell a put spread fairly far out of the money because we would have had, in theory, a vol increase, and it would have been a pretty good deal. Didn't happen today. Such is life. That's the way it goes. But one thing that we did do that was of interest today, to me anyway, was how we did rally shortly after the announcement when Janet Yellen was talking very dovishly. And then with that, I'm thinking, well, okay, looks like I'm going to have to take one for the team. We might close above the 2,000 mark today, and looks like I'm going to have to start to get back into the market and put my money where my mouth is, so to speak. And I would have, just because I would have taken some type of step to get back into a bullish position in one way, shape, or form. And the reason is because the ultimate trading plan of what I'm trying to do for my clients within this strategy is to capitalize on a bull market and be in the market as the market's going higher, but be out of the market as the market's going lower, not necessarily trying to make money on the downside, just trying to protect ourselves in case the market is to go down in some way, shape, or form. So with that, I was actually looking at various options with which I was going to buy and when I would get in and that type of thing. And then the market started dropping, and then we went below the 2,000 mark on the SPX again. But what I was looking to do, had we closed above the 2,000 mark, was to buy an SPY December 205 call. And the reason with which I chose that strike price is because SPY opened the year at 205.54. And in December, you can't buy the 205 half ones, it's just the 205 ones. So that's kind of the closest one that there was. But my thought was that we're finally close enough to where I wouldn't feel bad about buying an out of the money option, because I thought about doing this when we were at like the 185 mark in SPY a couple weeks ago in the downturns. I'm thinking, well, okay, I'm out of the marketplace, and for maybe $2, I can get back into the marketplace, have all the upside of the market guaranteed for the rest of the year, and then still only have $2 at risk. Not a bad deal, but it was just too far away from the marketplace to justify getting into it. Fast forward to today. This is how volatility can really have an effect on options. That same 205 call, when the market was at 202 at some point today, it was at 202.89. I looked at that call option and it was valued at $4.41. Now it closed on the day at $3.41 because it came back down. But my point is that when you do have an increase in volatility and a decrease in the marketplace, then it's not necessarily the best time to buy calls. If the market starts coming back and you start to rise up again, or the market starts to rise up again, then it's something to consider. And the reason I say that is because it's okay to miss a little bit if you're a call buyer. Because as the market goes higher, a lot of times volatility goes lower, and you won't miss as much as you think necessarily, because volatility and time decay are typically working against you. If we have a big drop and you want to have some type of market exposure, a lot of times what I like to do is sell puts or sell put spreads in some way, shape, or form. If we're at a point to where the market's starting to come higher and you want to kind of buy on the way up, or you've gotten the confirmations with which you need to get into the market, at that stage, a lot of times I tend to lean more towards buying premium and going that route. So if you're going into a big announcement and you're concerned that you're going to miss the upside, well, maybe you can buy a call, or like right after the announcement, as it starts to increase and vol starts to decrease, let's say the announcement was good, then maybe at that stage you can look to buy a call option and then ride the momentum higher if you have a longer term approach to it. So that is what I wanted to go through today in the block of strategery. And hopefully this is something with which you guys can help with your trading and how you look at things in terms of selecting the right strategy for the right situation.
Thank you for that, Uncle Mike, in these days of Fed nonsense. It's nice to have a calm voice talking us back from the ledge and indeed from our deep, deep umbrage. And because it is Thursday, we want to take a few of your questions as well. So we'll dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where you guys get to take the reins. No shortage of ways for you guys to hit us up, including on the old website, theoptionsinsider.com, comment form, feedback form, etc. You know how to do it. Or, of course, social media, twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via email questions at theoptionsinsider.com. Again, you pick the medium carrier pigeon. It'll probably get to us, just like some of our friends here set off with. Let's see. We get some good long ones. We get a lot of good long ones on a regular basis. We'll see how many we can fit in. Let's start off with Hawkeye 31415. I believe he's written in before, and he writes, "Hey, Mark, few things." He's got quite a few things. Too bad the daily dose of the lobster was too much of a cholesterol bomb for those guys at Thinkorswim. Bummer. I like the show. He's, of course, referring to our Options Oddities program, which we are kind of retooling as we speak. If you're a fan of that, I know a lot of you guys were. Don't worry. We'll be bringing it back in some way, shape, or form. Quite frankly, it was a bit of a burden for us to do a daily half-hour show like that. So we're thinking about bringing it back, maybe a little bit less frequency, maybe, 3 3 times a week or a couple times a week, something like that. We were doing it at the time really to fill a time slot over there at TD, which was good, but on the other hand, it was a lot of work for us here to do a daily half-hour show like that. So we'll probably revisit it in some other form, a little bit more expedited. Maybe do some short alerts every day, but shorter. We'll see what the ideal dosage is for that. But I know you guys love your UA. We'll get it to you. Don't worry. We're just figuring out the right format for it. He goes on to write, he's covering all of our shows here, really. He says, hey, with respect to the OIC's study on the various option strategies since 2003, which you've touched on other programs, listeners like the advisor's option, he writes, are you really surprised the highest return was gained by a synthetic short put stupid? And what has mostly been a bull market, he puts in parentheses, covered strangle is greater than short call, equal to or greater than short call plus long stock equals in the money short put plus out of the money short put. So yes, selling 2 puts brings in more money than selling only 1. Yes, the Lobster and the Meatball have taught me enough to figure this out, and they should feel good that something has stuck. Keep the great shows coming. Hawkeye, he was clearly a mentee, a client of Andrew's and Mark's. Andrew, of course, unfortunately had to run. He had a bit of a client emergency, so he can't chime in on this one himself. If you're not familiar with what he's talking about, listeners, that's a study, like I said, we mentioned on the advisor's option, I believe Options Bootcamp as well, maybe touch on this program as well, where they looked at a variety of different strategies and how they performed over time. And the reason I highlighted that Hawkeye was not so much that it was surprising in the results. It was surprising really to me in the fact that someone actually commissioned a study like that, because I've seen people in the past trying to do things like covered strangles, because if you're trying to appeal to an institutional type crowd, they like income. If you can present them with double income, they usually get pretty excited. But whenever people have tried to commission studies like that in the past, whenever the fund managers, they can handle a long stock short call position. You add on a short put leg, which is essentially, now an extra short leg, more risk to the downside. It tended to blow their mind, and they couldn't handle it. So people kind of let those studies fall by the wayside because no one was interested. OIC proceeded anyway, and they got the data. I think a lot of people expected, but it's good to have that data in hand, particularly if you're a guy like Uncle Mike trying to sell a client on options and their use cases, or if you're looking for a financial advisor or an institutional guy who wants to sell an institutional clientele on using these products. That kind of data is handy. Was it surprising? No. Was it surprising that they actually did it and that people were actually responding to the survey? That was indeed surprising. Uncle Mike, he does reference you as well. He's gone all over the place with this email, but I like it. He says, P.S. A while back, Uncle Mike answered a question I had about a holding. I sent a thank you a while back, but I wasn't sure he ever got it. Anyways, please tell Uncle Mike thanks. That was an outstanding answer, and it made perfect sense. So he loves everything. He loves the shows. He loves the Rock Lobster and the Meatball, and he indeed loves you, Uncle Mike. So this guy is a fan of everything. So what do you have to say to our friend Hawkeye, who is sending you some love here, Uncle Mike?
Oh, always good to hear from a Big Ten fan. Go Hawkeyes. Hope they have a great year this year. Anyway, yeah, I think that, so thank you for the thank you, by the way. Very grateful for that. It's always good to be recognized in some way, shape, or form. And, I think you're right, Mark, in terms of when a fund manager, at first, a covered call is a very simple thing to someone who is a non-option person. But then when you introduce to them that a short put is pretty much the same thing, then that does kind of blow their mind a little bit. And so what I think's happening right now is that, and this is at least in our experience on the institutional side of it, margin rates are coming down, not necessarily because of interest rates, but because of the fact that with portfolio margin out there, there's a lot of people that feel more comfortable with doing a 200 shares and a 2-lot covered call, as opposed to a covered call, meaning you have 100 shares of stock, 1 short call, along with 1 short put. And it's just becoming more of a comfort thing. And I think margin rates are going to continue to come down, so that can be accommodated in some way, shape, or form. In a portfolio margin account, it would be a very similar position from a margin maintenance standpoint, whereas in a Reg T account, it would be a higher maintenance requirement by having the 200 shares of stock with 2 short calls, as opposed to the short put along with the 100 shares of stock and 1 short call on it. So it's an interesting topic. And I think with portfolio margin coming in the way with which it is, I think a lot of more studies like that, I think, will come about because of portfolio margin's popularity.
I couldn't agree more, and I do like to see more of this data, more of these studies, because I've been to a lot. You probably have as well, Uncle Mike, but I've been to a lot of these conferences that cater to the institutional, quote unquote, savvy money manager, family office, whatever they are, asset managers out there, and you'd be amazed how many people out there. This kind of stuff would just blow their mind. Even something as rudimentary as buying a put is overwhelming to them. They refuse to do that. So if you can convince them, and something like a covered call, they can maybe wrap their heads around that over time. So if you can give them data to now do other things that may be interesting from an options perspective, from an income perspective, the more data we have in hand, the better. So good questions. Keep them coming. I said they're long. So we only had time to get to one, but we read them all if we don't get to all of them, and we try to answer as many as we can on the old program. But now it's time for us to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're keeping an eye on for the rest of this week into the old weekend. And Uncle Mike, our Fed umbrage aside, did give us a lot to chew on and analyze and look at and prognosticate for the days and weeks to come. And now that that's gone, that's out of the way, I think the question mark going into this week was always what happens after the Fed does whatever the hell they're going to do. Will vol remain high? Everything else, will vol come off? Will the market sell off? What's going to happen? And now I think, kind of like we referred to at the top of the show, Uncle Mike, I don't know if it probably sounds like you are in this camp as well. My question mark's even a little bit bigger right now, because now what the hell do we watch? What the hell is really going to unfold? What is going to be the driver? We do have earnings on the horizon in a little bit, but really not kicking it off right now. So yet still there is clearly a lot of vol left in this marketplace, clearly a lot of uncertainty, a little bit odd. So Uncle Mike, what's catching your eye? What are you watching for the rest of this week into the old weekend?
A couple things. The first thing I want to point out is that we're down about 2.5% to 3% on the S&P this year after today. And so when you look at that, it's been probably the most exciting down 2.5% in mid-September market probably in the history of the planet, quite frankly, with everything that's been going on. So I think that we have a resilient market in the longer term. But in the near term, once again, I stand by my comments earlier that we couldn't get through 2000 today. Now, here's what I'm going to be watching in particular. There's the BBI I'm going to introduce right now, the SBOI, the Sleep Bed Index for Uncle Mike, in that I think that we're so asphyxiated on overseas markets at this point. And if you look at it, this is the most overnight action that I can remember seeing in a long time in the marketplace. It seems like we don't really get too much action during the day. I mean, we did today, but just over the course of the last few weeks, it seems like a lot of our movement has come in the overnight markets. So I think that something to look at are the Asian markets, perhaps the European markets, but I think a lot with what's going on with China is something to watch. But in general, for the trading action that I'm watching in particular is the overnight markets and just how I can position for some type of a large move in the overnight markets. Right now, folks, the S&P closed down 4 points on the day today. This is Fed day, the SPX closed down 5 points. And I'm willing to bet that we will have I think that we will be plus or minus at least 10 points on Friday morning before the open. Just based upon what we've seen in the previous weeks, the market will have had a chance to digest whatever they think the Fed announcement's going to be, and we're going to have overseas markets going on tonight. So overseas markets and the overnight, and I'm done sleeping for a while. I can go to the bathroom again, but I got to quit sleeping, I guess.
Yeah, we need a new one. In addition to the BBI and the Innovation Index for Apple, we now need the Uncle Mike sleep quotient. How much sleep did you get the previous night? Because I agree, looks like we're already seeing a little bit of activity in some of the index futures going into the end here, and we'll see if we this continues through the overnight into tomorrow. And I tend to concur with that. I think we'll have a little bit of rocking and a rolling open because right now, quite frankly, it's anyone's ball game. The Bears, the Bulls. We'll see who sinks their teeth in or their horns tomorrow and sets the tone. In the meantime, that's all the tone setting we're doing here on the old option block program for today, for this Fed heightened week, shall we say. But we'll be back next week with more fun content, more umbrage, all the stuff you guys love from the old program. But before we go, as always, let me check back in with my cohorts here, my partners in crime. Rock Lobster had to go deal with some clients, but he wanted me to remind you that he's got boot camp coming up next week. So not our boot camp, not the one me and Dan Passarelli do. Those guys at Option Pit stole our thunder, or at least steal our name. Our lawyers are researching it as we speak. But they have their own boot camp. Ours is free, theirs is not. But theirs is a little bit more lengthy and involved. Surf on over to optionpit.com and look for the boot camp tab there. Maybe just type /boot camp into the URL there, and you'll find out how to sign up. And of course, you can get all their archive webinars, like their Vol webinar they did last week. I know that was pretty well attended, so if you missed that one, check out the recording there as well. And Uncle Mike, I said earlier today, I was overwhelmed with RCM folks today, guys, on the future side, doing a bunch of interesting future stuff, talking about their event coming up in Houston, coming up. What do you have coming up, Uncle Mike, in the land of RCM Wealth Advisors?
Well, what I have coming up is financial advisory clientele with an open door to come on in. Folks, your kids are back in school right now, and the Fed has made their announcement, and the weather's starting to get a little bit colder, with the exception of St. Charles, where the weather's always 70 degrees and sunny, and we provide our own water and our own heat. But there's no excuse right now if you have been putting off having a discussion about your financial future, whether it is general financial planning, market performance, whatever the case may be. Call me up, folks. I am open for business now, but my window does go away pretty quickly whenever I make these announcements on this show for financial advisory business. So feel free to give me a call, 312-212-3531, or send me an email at mtosaw@rcmfs.com.
And just think, listeners, we spent the whole show pretty much talking about how nonsensical the markets have been over the past week. How nice would it have been to have someone like Uncle Mike staying up late at night and coming in early and not going to the bathroom for you this week, so you don't have to do stuff like that. So if that sounds like a fun thing to you, you want to maybe sleep at night, spend a little extra time with your day job and relax, and not have to worry about what the hell Yellen is up to and everything else, then by all means, give Uncle Mike a call, shoot him an email, and let him do the worrying for you and the put rolling and all that fun stuff. So you don't have to. That's what guys like him are for, right? Take advantage of it while it's available. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, of course, for sending in such great and epic questions. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.